Howdy, everybody. Welcome to Liberty Call. Today is Monday, February 12th, 2024. Hope everyone out there is having a fantastical day and had a good weekend. Did you watch the big game yesterday? It was quite boring, in my opinion. The end and overtime was, a little more exciting, but the game itself, you could sleep right through it. So, plus I was cooking dinner and stuff like that, so I wasn't really that interested in it. So, did watch some college basketball before the game, which was always good. And the Cougs won on Saturday, even better. It was a nail biter, but we'll take a win where we can get them. So, anyways, also, this is my birthday week. I turned 50 on Thursday. Can you believe this young man is going to be 50 years old? Well, maybe based on the gray in my beard these days. But, anyways. All right. Well, we're going to get into the news for the day, the weekly economic update, and a couple of articles. So, first, if it is your first time watching Liberty Call, if you could give me some thumbs up, like, share, subscribe, follows, and press that notification bell. Let's go ahead and get into today's numbers and see how they turned out. All right, Dow Jones finished up 0.33%, 126 points, closed at 38,798. S&P 500 was flat, down 0.06, closed at 50.23. NASDAQ down 0.3, closed at 15,942. The VIX was up 7.35% today. It's at 1388. Canada down 0.27, Canada up 0.27, Brazil down 0.15, and Mexico up 0.12. Over in Europe, Germany was up 0.65, the UK flat up 0.01, France up 0.55. Why do people seem to think it's okay to call me while I'm doing my update? I mean, come on, people. Netherlands up 0.37, Spain up 0.89, Italy up 0.97, Switzerland up 0.79, and Portugal up 1.11%. Russian exchanges were mixed today. The MOEX up 0.08, the RTSI down 0.19. And the Asian markets, let's see, the Nikkei was closed. Australia was down 0.39 and New Zealand down 0.6. And looks like everything else in Asia was closed for I believe it's the Lunar New Year right this week. So, all right, so that's everything as far as the markets for today. So, our markets were in the green most of the day. I was a little surprised to see the S&P and the NASDAQ in the red when I flipped over. So I hadn't looked at my chart in a little bit. All righty, well, let's go ahead and get to the weekly economic update. Week on Wall Street, the stock market experienced solid gains last week, including the trading week on a positive note, thanks to robust corporate reports and favorable inflation news. This propelled the S&P 500 index to achieve a new record high at the end of the week. The S&P tops 5,000. At the start of the week's trading, stocks faced downward pressure due to comments from Fed Chair Powell over the weekend, signaling that the Federal Reserve had no immediate plans to initiate interest rate cuts. Consequently, the yield on the 2-year U.S. Treasury note, highly influenced by monetary policy, increased to its highest level in 2 months. By the end of trading on Monday, stocks had regained a significant portion of their previous losses. Influencing this market rally were positive corporate earnings reports. The trend continued throughout the week, contributing to the overall market momentum. By Friday, 67% of the companies listed in the S&P 500 had released their Q4 results, and an impressive 77% of those companies exceeded earnings expectations. Investors expressed enthusiasm on Friday after a report indicating that December's inflation was lower than initially anticipated. This positive news revitalized buying activity, resulting in the S&P 500 surpassing 5,000 for the first time. All right. Economic strength, the strength of the U.S. economy, has come into spotlight. An analysis conducted by the Wall Street Journal recently proposed that the economy's resilience could be attributed, at least in part, to the productivity driven by the tech sector. What might rein in that productivity? One possible influence could be the increase in oil prices witnessed last week. Additionally, shipping companies have been imposing surcharges for several months to mitigate recent conflict, and these charges may contribute to global inflation this year, potentially dampening investor enthusiasm. Economic data this week. Tuesday, we have the Consumer Price Index. Wednesday, we have the EIA Petroleum Report. Thursday, Industrial Production, Retail Sales, and Jobless Claims. Friday, Housing Starts, the Producer Price Index, and Consumer Sentiment. Companies reporting earnings this week. Today on Monday, we have Arista Networks and Waste Management. Tuesday is Coca-Cola, Shopify, Airbnb, and Moody's Corporation. Wednesday is Cisco Systems, Sony, and Kraft Heinz. Thursday is Applied Materials and John Deere. All right, so that's everything for the weekly update. You updated? You feel smarter? I know I do. All right, let's go ahead and move over to today's market recap. S&P 500 pairs gains after hitting fresh record highs ahead of inflation and earnings. Let's see here. All right. The S&P 500 experienced a slight pullback from its record highs on Monday, with energy and financial sectors leading the retreat amid anticipation of upcoming economic data releases and corporate earnings announcements. Diamondback Energy notably surged over 10% following its acquisition of Endeavor Energy for $26 billion, positioning itself as the second largest producer in the Permian Basin. This move prompted speculation about potential asset rationalization in the Delaware Basin. Other energy stocks like APA Corporation, Schlumberger, and EQT Corporation also saw gains of over 2%. Meanwhile, Federal Reserve officials, including Governor Michelle Bowman, emphasized the necessity of maintaining tight monetary policy to curb inflation, signaling no immediate rate cuts. Market focus turned to upcoming inflation data for January, expected to reveal a slowdown in price growth on both an annual and monthly basis. The earnings season continued to unfold with more than 60 S&P 500 companies scheduled to report quarterly results. Analysts were particularly interested in insights from companies like Coca-Cola, Shopify, and Kraft Heinz, who could shed light on consumer health. Additionally, Cisco Systems earnings were awaited as capitalization on the AI boom alongside cryptocurrency exchange Coinbase amidst recent volatility in the digital coin market. As of February 9th, approximately 75% of S&P 500 companies had surpassed earnings expectations, with around 65% reporting positive revenue outcomes, according to FactSet. Market participants remained attentive to earnings reports and economic indicators as they gauged the overall health of the economy and corporate performance. Good stuff. It's good news this week. So far, it's only Monday afternoon. All right, next up, we have an article here from Zero Hedge titled "Stocks Hit All-Time High," quote, "New Era in Productivity and Profitability," end quote, except we've seen this all before. And this was written by Benjamin Picton of Rabobank. Get my notes up here. All right, the article by Benjamin Picton of Rabobank delves into the recent milestone achieved by the S&P 500 index, which served above the 5,000 mark for the first time. Driving this ascent were primarily tech stocks, notably the Magnificent Seven, which witnessed substantial appreciation. These gains are underpinned by the prevailing narrative around artificial intelligence and its purported potential to redefine productivity and profitability in various sectors. However, Picton juxtaposes the optimistic outlook with a historical perspective, highlighting the recurrent pattern of speculative bubbles in financial markets. He questions whether the current fervor for AI represents a genuine paradigm shift or merely another instance of authentic foolishness. Drawing parallels to past episodes like the dot-com era, Picton observes a tendency to rely on alternative valuation metrics to justify lofty stock prices. Despite concerns regarding stretched valuations and upward pressure on bond yields, the market continues its upward trajectory. Picton speculates on the influence of passive indexing and prevailing sentiment of a perpetually bullish market, buoyed by the notion that, quote, "as long as the music's playing, you got to get up and dance," end quote. Moreover, the article delves into the shifts in central bank policies, particularly in New Zealand and Australia, where there's a discernible pivot towards tightening monetary policy. Antipodean central banks appear to be reevaluating their stance amid robust labor market figures and inflationary pressures. Such developments underscore the evolving landscape of global monetary policy and potential ramifications for financial markets. In addition to monetary policy, global tensions in the Middle East, notably lack of progress in ceasefire talks between Israel and Hamas, contribute to these uncertainties. These geopolitical dynamics have implications for oil prices, with the potential to disrupt energy flows through critical passages like the Hormuz Strait, as suggested by analysts. Overall, the article serves as a cautionary reminder of the risks associated with overvalued assets and the possibility of a paradigm shift in financial markets. It encourages readers to critically assess prevailing narratives and market exuberance, considering the broader geopolitical and macroeconomic landscape. All right. So, and also, if we go back here to this article, it talks about how the Magnificent Seven, which is basically these tech stocks, they've done great. If you take those out, the S&P 500 has gone nowhere over that time. So, over the last, I guess, 2 or 3 years, basically the rest of the S&P 500 is flat, except for those 7 tech names. All right, last up, got an article here from First Trust in Mr. Brian Westbury. This week's article is titled CBO's Rosy Scenario. The CBO is the Congressional Budget Office. All right, the Congressional Budget Office recently released updated projections for budget deficits and national debt over the next decade, indicating a somewhat less dire outlook compared to previous estimates. While deficits and debt are still projected to be alarmingly high, the CBO forecasts a slightly lower deficit of 6.4% of GDP by 2033, down from the previous estimate of 7.3%. Similarly, total accumulated debt is expected to reach 114% of GDP by 2033, rather than the previously forecasted 119%. Yeah, so that 5% is going to make a huge difference. However, these projections are based on optimistic assumptions, particularly regarding the repeal of certain tax cuts enacted in 2017. The CBO anticipates economic growth to remain steady at around 2% annually, assuming no adverse effects from the removal of these tax cuts. Yet, it's improbable that such a scenario would unfold without impacting growth and revenue negatively, potentially leading to larger budget deficits. Both parties will face the challenge of addressing deficits regardless of the election outcomes. If the GOP secures a majority, continuation of the 27 tax cuts is likely, accompanied by measures such as cuts to, quote, green energy subsidies, increased tariffs, and Medicaid reform. Conversely, a Democrat sweep, which would be a shock, could entail various tax hikes, including raising income taxes, capital gains taxes, corporate taxes, and possibly a carbon tax. Yeah, because I want to pay that. The likelihood of mixed government scenarios, whether neither party holds a clear majority, is also significant. This could lead to intense political battles with little consensus on fiscal policy reforms. Such scenarios may hinder entitlement reforms and deficit reduction efforts, potentially leaving room for bond vigilantes to exert pressure on government borrowing. Or there's a third scenario where the federal government completely collapses and frees those of us who are taxpayers from our bondage of having to give up 30, 40% of what we make to fund wars and killing brown people on the other side of the planet. So, and also paying, laundering money to, the politicians, good buddies in the military industrial complex, big pharma, goes on and on and on. All right. Well, that's everything I had for today. If anyone needs anything from me, hang on one second. Go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you next time. So have a good night. Bye-bye.